this is the last panel. And then, first of all, I would like of you to introduce yourself, a few sentences and your company.
Hi folks, I'm Jason Fernandes, co-founder of AdLunam. AdLunam is an investment ecosystem. We sort of help projects from zero to IDO, help them in the lead up to the IDO. That involves connecting them with institutional investors, advisors, exchanges, launch pads, and then finally helping them get listed. Basically everything that they need in the lead up to their launch.
All right, thank you so much, Jason. I would like you guys to update me a little bit, lighten me up. What's going on in the DeFi space and traditional finance sector?
Sure. So I think it's important to remember that DeFi was created in opposition to traditional finance in the first place. So to the extent that there's an overlap, it is certainly unintentional from the perspective of DeFi and then traditional finance. Well, the traditional finance has tried to co-opt some of the things that DeFi has been successful with. So they've tried to work on things like blockchain and smart contracts and things like that. But I think if anything, it's more of a danger than something that's going to help the ecosystem. I think one of the two areas that we'll see sort of traditional finance and DeFi have any sort of relationship is in the areas of CBDCs. And then also in the areas of things like Bitcoin ETF, for example. So for example, a Bitcoin ETF will allow a lot of institutional money to flow into crypto. But the flip side of that is what you have then is a highly correlated asset, an asset that has a high risk of contagion with the traditional finance sector, right? So there was a time when Bitcoin was considered a non-correlated asset, so it behaved as a hedge. When things in traditional finance were going a bit crazy, Bitcoin would behave as a hedge. Well, now when you have things like sort of CBDCs and even things like the Bitcoin ETF, perhaps that should it get approved, you have a much higher risk of financial contagion from sort of traditional finance and DeFi. So I'm not really sure that to the extent that there's any overlap, that's actually a good thing.
How are regulators responding to the growth of DeFi? And what implication does this have to the traditional finance institution? Jason, back to you.
Well, I think to the extent that regulation has sort of interacted with DeFi, it's been mostly punitive, I think. So I think that there still has a long way to go for regulation to really clarify kind of where they stand on various different areas of the DeFi ecosystem and what would be considered. So for example, there was a long time people were setting up DAOs because they figured that was essentially a regulation-free zone, but that we clearly know that that's not the case. There have been several DAOs that have been investigated by regulatory authorities. So I mean, I think we have a long way to go before I think people have a sort of a decent understanding of where those two worlds intersect.
In terms of the innovation, how banks, investment firms, and traditional finance institutions are exploring the DeFi technologies.
Even if there were a way to figure out when would be the right time to pull the plug on a protocol because there was enough liquidity, you wouldn't know what to do next, right? So for example, like when you shut down a traditional bank, then the FDIC would come in and make sure that certain investors were made whole. What would be the equivalent in a DeFi situation, right? And then how do you ensure that everybody agrees that there's not enough liquidity, for example, right? So like the whole definition of having everybody having their own voice essentially makes it sort of impossible to create those structures around what you would need in order to have any sort of rescue for those DeFi degens, for example.
And in terms of the innovation, how DeFi innovation and technology have influenced traditional finance?
So I think, again, like I said in the beginning, it's really important to remember that DeFi was invented to solve problems that traditional finance is not able to solve, not unwilling to solve, is unable to solve perhaps due to regulation, due to lack of identity, things like this. So it's not, to the extent that there's an overlap, it's completely unintentional, right? And there's not a lot, I think, that DeFi can benefit from traditional finance. It's more so the other way around. It's more so sort of traditional finance trying desperately to catch up with the way DeFi is sort of streamline a lot of things. So I'm not sure, again, whether there's a lot of overlap that is beneficial from the perspective of DeFi. So I think it's really important to remember that the overlap is more from the perspective of traditional finance trying to just co-opt things that are standard in DeFi. Once DeFi has figured out how to solve a problem that traditional finance has not really been able to solve, like I'm not sure what role traditional finance has at all in there. I mean, what the point of it is, really, and what value they can bring, with the exception perhaps of additional liquidity and sort of having that bridge of liquidity from traditional finance into decentralized finance. But of course, even that, things like pools and can fill up that missing structure that DeFi might have. So I'm not really sure, again, where there's an overlap and if there's any benefit at all to DeFi.
All right, very well said, Jason. Yeah, thank you so much. Yeah, let me ask you, can traditional finance institutions maintain their centralized structure while participating in the decentralized finance ecosystem? Yes, Jason.
Yeah, I mean, again, right? So they're almost diametrically opposed, right? So if you consider the principle of DeFi being non-centralization, and like I'm not sure how there's any areas of synergy between that and a fundamentally centralized system and a fundamentally regulated system. So I'm not sure how much there could be a lot of cross-pollination of technology. I mean, traditional finance could certainly adopt things that are working in DeFi. So for example, smart contracts and blockchain, but as really sort of try to pigeonhole a solution after the fact, rather than sort of building something from the ground up that actually makes sense. Yeah, so I think a lot of the funds that are currently locked up in traditional finance will start over the next 5 years figuring out a way to move into the DeFi world more. And I think that the DeFi world will start building guardrails that would protect retail investors to the point where sort of traditional finance over the next 5 years would become much less useful for the average people. I think a lot of the gaps that traditional finance has will sort of be filled with DeFi, which is already happening. But then I think on the flip side, a lot of the guardrails that traditional finance has right now will make its way to DeFi, and then pretty much make it easier for people to sort of interact with the DeFi ecosystem, and then over the next 5 years, probably eliminate the need for traditional finance altogether, perhaps.
Yes. All right, yeah, thank you so much. I hope you guys have learned a lot today. Yeah, as me, myself too. Yeah, thank you for the insights from all the experts today. Yeah, thank you very much. Yeah, I'll pass the next session to May. Yeah.